Happy Tuesday to everybody. I know that intro probably was not as good as hearing it live yesterday, but it is what it is. How's everybody doing today? Can everybody hear and see me okay? Let me know in the chat. There we go, Aladdin. Hello. Thank you. And yes, you guys all know I'm a major, huge Cubs fan, and I am wearing this today in honor, in memory of the just fantastic Ryne Sandberg, who passed away yesterday from a battle with cancer. So there's a lot of sorrowful feelings around Chicago. He was one of my, not so much boyhood idols. He came onto the scene when I was in high school. Maybe the best second baseman of all time, but certainly an idol in and around Chicago, an idol, a baseball idol of mine. So R.I.P. Ryne Sandberg. All right, in Rhino's honor, everybody smash that like button, please. Smash and subscribe. All right. Yeah, it's really a bummer. Really a bummer. It's a good thing I have an autographed, framed, authentic jersey of his that hangs in my house. It's one of the actually I'll post it up here as we get going. It's one of the 1984 Cubs jerseys, which is the year that he really exploded and won the MVP. A lot of people probably heard about the Sandberg game, which was on TV, in which he had 3 homers, 2 of them in extra innings off of Bruce Sutter. Okay, but I'll post that up here. So if you are a baseball fan, regardless of if you are a Cubs fan or not, it's a sad day. It really is. All right, let's get on to what is really important. And we are going to continue from where we were yesterday. Danny's not here today, so no interruptions whatsoever. But we are going to continue from where we were yesterday because there is still a lot of really incredibly important eco data remaining this week that is still yet to come out that absolutely can affect the marketplace. Okay, so as a quick review, is it the biggest week of the year? It's definitely one of them. Okay, Powell and the Fed is tomorrow. Apple, Amazon, Microsoft, Meta, they're earning tomorrow and Thursday. The eco data that's on deck, we're going to go through that, and then Friday is the tariff deadline. And by the way, I'll just throw this in here. Not that you guys really care, but I love this stuff. So here is, this hangs in my house. This is my Ryne Sandberg authentic 1984 MVP jersey. Okay, on to business. But where did hang on. There we go. Okay, so yesterday, quick review here, guys. Yesterday, we went over all of the Treasury auctions all week long. Okay, we talked about Redbook Jolts, Atlanta Fed GDP Now, which all coming out today. Tomorrow, we've got ADP non-farm employment. We talked about that. Talked about core PCE, real consumer spending, and we got up to GDP. Okay, we left it off right there. So it is huge market activity really starting, tomorrow. Okay, not that there's not a lot going on right now. So let's talk about the Fed. Okay, what they do, how we follow what the rate progression, rate cycle might be. Okay, and how does the market price things in? Okay, this is, and we've shown this here before. This is the CME FedWatch tool, and you know what? Let me post up a link so everybody can get that at any time. I'm going to post it up in the chat right now. Okay. That's a link that I just posted, which goes right to the CME website, and it's called the FedWatch tool. Okay. Now, what is this thing called? The FedWatch tool. Okay. And why does the CME put it out? Well, CME puts it out because the treasury markets, okay, all trade at CME. And what this does, the CME FedWatch tool, is it analyzes the probability of the FOMC, which is the Federal Open Market Committee, okay, their rate moves for upcoming meetings. Okay, they use the 30-day Fed fund futures pricing data. Okay, remember what Fed funds are? It's the rate that they charge to banks, the overnight lending rate. Okay, so this FedWatch tool, which is a live tool, so these probabilities are changing all of the time. Okay, and what it looks at is both current and historical probabilities of various FOMC rate change outcomes. Okay, so what we can see here, and this is for tomorrow's meeting. Okay, if you go to the FedWatch tool page, you'll see this. So let me break a few things down here. Up at the top here, this shows all of the upcoming meeting dates. And we talked about yesterday, Fed meets every 6 weeks, 8 times a year, every 6 weeks. So because this 6-week cycle happens to end tomorrow, and they're actually meeting today, but tomorrow is the announcement, there is no meeting in August. So the next one would be middle of September. So right now, the current target rate, the current target Fed funds rate is 4.25% to 4.5%. The market is pricing in 97% probability that they're not going to do anything tomorrow. Okay, they're not going to lower rates tomorrow. 97% probability. Okay. 1 month ago, and this is what's really cool on this FedWatch tool, if you look down at the bottom here, 1 month ago, there was actually almost a 20% probability of a rate cut. But the eco data, the economic data that we have seen over the last month has all lent itself to the Fed not lowering rates, meaning the economic activity, the economic data has been fairly strong. Okay, so any questions on this chart before I move on to the next one? Because we're going to look at each subsequent meeting for the rest of the year here and see what the projections are. So any questions here? Okay. That's a big no. All right. Let's move on. This is now the projections for the September meeting. Okay. So you can see, again, the current target rate, which is right here, 4.25%, 4.5%. Right here, right now, live data, basically a 64% probability that there will be a cut. Only a 36% probability that rates will be remaining the same. Okay. So there's almost a 62% probability that the cut would be 25 basis points or a quarter of a percent. You can see that 62% is for rates being down at a target of 4 to 4.25. Okay. And there's a very small probability right now, 2% probability, that at the September meeting, they actually cut by 50 basis points or a half of a percentage point and get that Fed funds target rate down to 3.75 to 4%. Okay. And just like when we were looking at the July data just now, and we took a month in the rear view mirror look, and we saw those probabilities a bit higher for a rate cut. If we look back 1 month ago, okay, what were the probabilities of where September rates would be? Okay, we can see that 1 month ago, there was almost a 75% probability factored into the marketplace of a 25 basis point cut. That's now down to 62%. And there was actually just over a 10% probability that we would see rates down here with a 50 basis point cut. Okay. Okay. I want to bore you with this because you can look for yourselves on that CME FedWatch tool, but we'll just run through October and December real quickly here. You can see the market right now is pricing in with the highest probability, basically 50%, that we're only going to see a 25 basis point cut between now and the October meeting. So maybe one and done in September, and then hold off a little bit. Okay, and then projecting out to the last meeting, which is in December. Now we start seeing an additional cut coming in because we can see that there is 63, almost a 65% probability that we would have rates lower by at least 50 basis points. That's what the market is pricing in. That's what treasuries are indicating to the CME FedWatch tool. Okay, this is the go-to. This is the Bible if you want to follow what the projection is for interest rates. It is the CME FedWatch tool. Okay, any questions? Any questions on this before we get moving on to the next data point? Okay. Thank you, Kevin. Onward. Jobless claims. Okay. Every Thursday, we get a weekly jobless claims number. It's called initial jobless claims. Okay. What does that do? It measures the number of individuals who have filed for unemployment insurance for the first time in the past week. Past data on what? On interest rates, on the jobless claims, on what? Okay, so jobless claims, I'll wait for Pat to answer here. Jobless claims, first time claims. It's the earliest U.S. economic data, okay, for what the job market is like. But the market impact varies week to week. Now, every Thursday morning, with the addition of the initial jobless claims. Initial meaning first time. Rate changes like last year. Pat, yes, if you go to that CME FedWatch tool, you'll find everything that you need in there. Okay. Continuing claims. To me, that's the more important number to focus on. Okay. Continuing claims measure the number of people who are continuing to file for weekly unemployment benefits. Okay. So it is it really measures how long people are unemployed for. Even though initial jobless claims, the weekly jobless claims, have been pretty steady. There's very minor fluctuation week to week. Been very steady. Continuing claims are at an all-time high, meaning there's never been more people on unemployment. Okay. Also on Thursday morning, we will get personal income and spending. It's another consumer-related indicator. Basically, what's the health of the consumer? We know the consumer makes up over 70% of GDP. So personal income measures the change in the total value of income received from all sources by consumers. It's closely correlated with consumer spending, which that does account, as we just talked about, for the majority of overall economic activity. So personal income and spending is a biggie. And then we get to Friday, and I'm not even talking about August 1st tariff deadline Friday. We're talking about the once a month data point of NFP or non-farm payrolls. That release, those numbers are released the first Friday of every month. Okay, and before we go into that, let's get to Thor. And you know what? Staying on the Ryan Sandberg Rhino theme, had to do it for our word of the day today. Today is all about Rhino. Anybody here a Cubs fan by any chance? Or, you could say a baseball fan in general, but Cubs fan? Because I saw there were a lot of pictures and wishes and all sorts of stuff going around last night for Ryan Sandberg. One thing that I saw, which I thought was just incredibly cool, and I'll just talk about this while you guys are all getting your Rhino in there. Come on, let me get it up on the screen here so everybody can see. Come on. I don't know why that's not sending. I will get that here in a moment. Or I'll come back to it, I guess, because I can't. Oh, there we go. Okay. So I saw this picture posted last night. This, if you're a Cub fan, if you're diehard Cubby Blue, this is unbelievable. You've got Ernie Banks, Ryan Sandberg, Ron Santo, and Harry Carey all drinking a beer up in heaven. I just thought that was really, really well done, really cool. Whoever, sure it was AI generated, whoever put that together. Okay. There you go. There's Rhino and Thor. Let's get back to non-farm payrolls. Okay. Non-farm payrolls, again, first Friday of every month. And the term non-farm payrolls refers to the number of jobs in the private sector and in government. Okay? Whether it's at the local, state, or federal level, that are added or lost each month. And these represent about 80% of all the workers who contribute to GDP. How is the data aggregated? Well, the poll measures non-farm employment hours and earnings broken down by industry for all 50 states, District of Columbia, okay, Puerto Rico, the Virgin Islands, and 450 metropolitan areas and divisions. There's about 130,000 or so businesses and government agencies, okay, which represent 670,000 unique different work sites that are surveyed each month. Okay. And what it is, it's a survey that covers an estimate on non-farm wage and salary jobs. Okay. It's not on the number of people employed. Okay. It is not on the number of people employed. So if someone works 2 jobs, okay, that's going to be counted twice. Okay. So why are they important? And they are extremely, extremely important. They're extremely important for the Fed. They're extremely important for the economy. They're extremely important for the markets. They're extremely important for interest rates. The reason being is because it gives us an insight into the employment backdrop all across the country. Okay. And the number of jobs that we see either added or lost each month is typically an indication of how well the economy is doing and what the Fed might do. Remember, what's the Fed's job? Full employment. Okay. Keep interest rates where they need to be so that we don't have inflation or recession. Obviously, we get to both of those levels because it's never going to be an exact balancing act. Okay, so if we see a pickup in jobs, if we see an increase in jobs, okay, maybe that's an indication that companies are hiring more people. And if that is the case, okay, just kind of extrapolate that out. If that's the case, okay, then typically we're going to see more spending. We're going to see an uptick in GDP. Okay, and if we see a really strong job market, which we have not seen recently, job market has been stable. It has not been really strong. But if we do see a really strong job market, that could mean that the economy is growing way too fast, which could lead to inflation. Okay, so non-farm payrolls are what are considered a leading indicator on the economy. Okay, it is a go-to as a prediction of how the economy is rolling along and where it may go to. So if we see continuing really strong employment numbers, and if that in turn leads to GDP growing, and if that in turn leads to inflation moving higher, what does the Fed do to kind of tame that? They raise rates. They raise rates to slow things down a little bit. The opposite is also true. Okay, if we see weak non-farm payroll numbers, if the employment situation is not real good, okay, then the Fed may have to come in and lower rates to spur the economy. So it is an absolute moving target of a balancing act. Does that make sense? Does everybody understand that? So, it's kind of this double-edged sword. Okay. And I'm going to point out something that President Trump has said recently. Yes, we all know that he's been, saying and voicing his opinion to Powell and the Fed that rates should be lower and they should be 3 percentage points lower. Okay. But in the same breath, he's also saying that our economy is humming on all cylinders. Can't have both. If the economy is firing away on all cylinders, there's no way you're going to get lower rates. So it's a difficult situation. It really is. Again, until the data shows it, I personally, and I'd love to see lower rates. I don't think the Fed should be lowering rates. And I'd love to see it. We'd all love to see lower rates. Okay, here is a snapshot over the last year of how non-farm payrolls have ebbed and flowed. Typically, there's not a huge discrepancy month to month, and there is some seasonality to it. There definitely is some seasonality to it. But you can see pretty much for this year, we have seen NFPs being pretty steady. Now, I will tell you that the number that the market is expecting, the estimates for this Friday, I believe are 108 or 109,000. The number comes in at 70 or 75, you will see bond prices going up, rates coming down. If the number comes in at 200,000, you will see the opposite. You will see bond prices selling off, and you will see rates moving higher. Okay? Aladdin, I think we can agree to disagree on that. Okay, now, how do the markets react? That's what we really care about, right? If we're going to be trading, how do the markets react to NFPs, to non-farm payrolls? Okay, well, an increase in non-farm payroll jobs, okay? Investors, analysts look for a healthy marketplace, and they look at that as a positive, shows that economic growth is okay. But if we get too much of a report, a stronger than expected payrolls report, like we just said, that could mean that the economy is expanding way too quickly and cause the markets to actually pull back because the Fed may raise rates. And when you see the word tighter in regards to monetary policy, that means raising rates. That is when the Fed, if you've heard the term, is hawkish. If there's a hawkish Fed or a hawkish person, it means they're looking at raising rates. Okay. Ronald, who are you asking that about? President Trump or Powell? Market going crazy. Kevin, is that a comment on what the market is doing right now or on what? Got it, Ronald. Got it. Okay, now, if we see a drop, like we talked about, if we see a drop in non-farm payrolls, NQ is going crazy. Okay, I'm looking. I'm not sure what. Guess I'm missing it. I do see a big rally in Bitcoin just now. S&Ps have been flat. I'm looking up here at CNBC. See the Nasdaq still down 20 points or so, but okay, got it. Okay, now back to this. If we see a drop in non-farm payrolls in a particular month, okay, that could be an indication the economy is slowing. And if we see a series of weak numbers or a massive drop, then that would be positioned for Fed to be dovish on interest rates. Dovish meaning lower rates. So higher rates is that tighter monetary policy or hawkish, and Lower rates is that loosening or dovish terminology. Okay. So, all in all, going back here, what a huge, huge, huge week for eco data, let alone all of the earnings reports, the Fed, and the tariff issue. So I know that yesterday was a really slow day to this morning. So far, today has been pretty slow. I would think things would pick up tomorrow. Okay. Wheel is closed. Let's get to the spin. Ooh, we got a nice one today. We got a nice one today. Let's go here on the wheel. Let's go in round and round and round. And who do we have? Do we have Pete or Ricardo? Who's it? Oh, on for just the last second there. Pete, are you still in the house? Wow, I thought that was one more little Cheerio and it would have gone to Ricardo. Pete, are you still in the house? That was close. Come on, Pete. There we go. Beautiful. All right, we got our winner for the day. Yeah, Ricardo, man, you were as close as I have seen it. All right, Pete, you know what to do. Shoot me an email at prosperswag@prospertrading.com. Okay. Before I leave, if anybody is interested, link for tonight, please. Tonight. Oh, that's a great song by Genesis. Maybe that could be a great introductory song also. With the drums, that, you know what? I love our fantasy song, but that could be, we might slip that in here every now and then. But tonight, you know what? I'm going to actually, before anybody goes here, hang on. I got to get to my music machine over here because I want everybody to hear this. Give me a moment here, folks. Sorry to turn my back. Okay, let's get this going, and I'm going to turn this puppy up. And unfortunately, I get you probably all heard it as well. Phil Collins, one of my personal favorite all-time artists, he's not doing so well either. You read on social media that he's really ill. He's in the hospital. Maybe he's actually on hospice. Who knows? But Genesis, Phil Collins, awesome. Anyway, I'm going to leave today with tribute to Rhino. And you know what? Nothing else needs to be said there. So thank you, everybody, for joining me today. We will see you tomorrow at the same time.